on. I think we got it. I think the mic is working. I think we got the everything else going on. You're gonna have to with me a second. I had some Wi-Fi issues all of a sudden. I don't know why the Wi-Fi kicked off, but um, new stuff. So, anyways, welcome, guys. This is the first time that we're doing something like this. We're doing Sunday or not. That's what I do on Sundays. Sunday Stockcast. But we're doing an evening class. We're gonna do this on Tuesdays and Thursdays, and I'm gonna give like just a little overview of what's just like a little technical analysis tidbits, and then maybe take some questions and stuff for you as well. All right. So let me go ahead and just put some links here and get people started. Just 1 second. All right. So if you have any questions or anything, leave them in the chat, so then I could go over them. And I'm logging into my Thinkorswim right now. Just give me a second. And it sucks because I had my Thinkorswim all set up for this and everything, and now it's not gonna be like that. Okay, cool. All right, guys, welcome. I'm gonna go ahead and switch over here to my other screen so that you guys can go ahead and take a look here on my Thinkorswim. And then today, what we're gonna be talking about is TTM squeeze. So the TTM squeeze indicator that I use and how it's calculated, how you use it, and a little bit about balanced and unbalanced markets and stuff too. So we'll go over those things here together. All right. Just give me a second here. We're gonna go into the SPY, and then I'm gonna actually set this up here real quick on the indicator so that you guys could kind of see what I'm talking about. So just give me a minute to do that while we wait for some more people to go ahead and join us. Yeah, dude, who's your dad? Yeah, who's your dad, dude? HBT Alpha, what's up, guys? Give me a second. Um, Alpha Utah, what's up, dude? What's up, guys? Nice to see some new faces in here, guys. If you guys don't know who I am, my name is Cruz. I'm the head trader and founder of New Age Wall Street. We trade primarily options. We do trade some small caps and equities. I did trade Revlon actually today, and just I wanted it to stay above this 10 and get over 1050 and for it to run, but no dice today. Maybe tomorrow. So let me just change some colors here real quick. We're gonna go ahead and take this one out. We'll leave that one purple. We'll make this one purple. Then we're gonna make the thickness a little bit thicker because we like them extra thick, like peanut butter with no water. All right. Then we'll do this one. Take this one out as well. Upper band. We're gonna do Someone pick a color. We'll do white. If you guys would just if you could leave me a like and subscribe to the channel, and go share the stream with all your trading friends and things like that, I would definitely appreciate it. Helps with the algorithm. So I don't know, dude. I'm not even gonna speculate on the whole HKD thing. That's I don't know, bro. It's crazy because like if we, and this is all I'm gonna say real quick about this, like it's not really like our topic that we're gonna talk about here today, but if we look at the daily right here, it only traded 351,000 shares, bro. Like it did not trade any type of volume. There's no liquidity in there. So you you come and you look at the higher volume candles for the day. Let's see which one would be a higher volume one. This one. And oh, it's not showing. There it is. Volume. There's only 12,000 shares that were traded within this candle, and that's the biggest one of the day. I think this thing spent more time being halted than it did actually trading today. So, um, who knows? I'm sure maybe we'll hear some type of report or get something like after everything finishes on what exactly happened. Like, if you guys know who Bill Huang is, Bill Huang, that's a really cool story, just a kind of cool case study. But they blew up his account over billions and billions being over leveraged, and no one really knew what happened until it did happen. So, and it was really crazy. I think it was a Thursday or Friday afternoon, and from that one account, from that one person, right, that one whatever you want to call it, they actually influenced the market, and you could see the SPY drop a little bit. Now it was obviously able to recover, but you could see where as it was happening, it's pretty crazy. So it's a cool case study if you guys want to go back and read it. So, oh yeah, Andrew, yes sir. I was thinking about him the other day. Your dad, all he ate was pozole and green chili stew when he was out hanging with me, dude. But real nice man, dude. I hope he's doing well. I hope your mom is doing well. Very nice, dude. All right, let's go ahead and kick this off here, guys. So down here, if you go ahead and you take a look, um, yeah. So I see some. So before we get too far in, so talking about this a little bit, it seems like it's a decoy, right? So a decoy to get like your attention off the AMTD that's also trading and stuff like that. Um, and I think there's some regulatory things that is going on with that. So, and it very well may be, right? So just kind of take the attention and the heat off another ticker and do it on on there, and maybe they're just trading two accounts within themselves and just fighting over it. Like it just I don't know anyone that's actually trying to trade this. You know what I mean? Like especially anyone that's type of retail, and anyone that's bigger. I mean, there's no reason for you to buy it up at these levels. I think everyone kind of knows the narrative of what's next, right? It's just when it happens. It's not if it happens. It's when it happens. So, um, with that being said, it is what it is, dude. It's kind of one thing that I did notice for just a personal note on my own is that I I don't get surprised anymore, man. I felt like what's his name, Nate Diaz. I'm not surprised, motherfucker. Like, dude, we could get supernovas every day, bro, and I'm just like, oh, like that's what happened. You know what I mean? Like, it's just something that comes with the territory of trading. Like, sometimes that does happen, and I've seen a few of them: KBIO, BPTH, Tilray. We had GME, and now I could kind of just chalk it up to the game, right? So that's what it is. So that's one thing that I did notice is that I have a newer trader that's in my room, and he's texting me kind of 3-4 times a day. I can't believe how far up HKD is, and I'm like, it doesn't matter, bro. Like, it doesn't matter. So All right, let's go ahead and get into our lesson here a little bit, guys. Gonna jump in and we're gonna talk about this TTM. So down here in the bottom, this is called TTM squeeze. Someone tell me what TTM stands for. I don't remember what the TTM actually stands for, but it is an indicator that was originated from John Carter. He licensed it to Thinkorswim, and they have the only original actual TTM. So there are other derivatives of it, like in TradingView, things like that. Not too hard to go ahead and make. It is the the sauce in it is a little bit different as to the way that they calculate it, but it's all typically the same. So what it is it's based off of the Bollinger Bands and the Keltner channels. All right. So the way that this works is the white lines in here are the Bollinger Bands. The ones that are outside, the purple ones, are the Keltner channels. Okay. And so we had actually a really good case study on this today. If you guys want to go ahead and take a look on Apple. So Apple was a really nice case study to this. And so what the indicator actually does is it measures volatility. So, and this is kind of like where we go into where this is sorry, I got a weird message. This it measures volatility. So then this is kind of where we come into being in a balanced or imbalanced type market, right? So we're going to go ahead and look at the SPY over here on this side, and we're going to come out to like a bigger time frame, so then I could show you what exactly we're going to use this area right here as kind of our case study right here, right? So whenever you have a period of consolidation, which we could agree right here on the SPY, this is a pretty nice channel, right? So if we come like this, and I see you guys writing there. I'll answer your questions here in a second. I'm going to focus on this. So we have a pretty nice channel right here of price action, right? So whenever we have this type of price action right here, this is what's called a balanced market. So between market makers, everyone on the market, this is the rare time that everyone could agree that this is pretty much fair value, that right here. In between this area, we could agree that the market is fairly valued, right? But that the market does not necessarily like to stay fair value, right? So there are catalysts and things that are evolving in politics and everyday life that would make the market either move to break out to the upside or break down to the downside, where it would lower or heighten the value of either the ticker, ETF, or commodity instrument that you're trading, whatever it is, right? This is applicable to anything that you trade. And so you get these breakouts here, like to the downside. So this is called price discovery or unbalanced market, right? So there's more sellers in here than there is buyers, right? So right here you have the equal amount of buying and selling. That's why we're going sideways. Right here we have unbalanced market, and then this is why we have this price move it, and we're going into price discovery to go to where the new price, where people believe that it is fairly valued. Then at that point, and we kind of get this sideways action down here at the bottom, right? So where the new buyers are sitting. So you could also argue like in this channel, right? So I could draw a little box right here, same thing. So this was a period of being in a balanced market. Then something happened right here. We could go back and look at the catalyst, but there's something that happened right here that said that we're fairly valued and that the market should be priced more. So then we broke out, and then we broke up to these levels, and then this was the correct value for that, either that catalyst, that news event, or what happened, and then it changed. Does that make sense? So that's the first part to actually yeah, dude, if you're if you're on Twitter, send me a DM on Twitter, brother. Send me a DM on Twitter. My @ is at New Age Wall Street. So at New Age Wall Street. All right, cool. So then that's the premise of the whole TTM squeeze, is whenever you have a balanced market, which I'm going to come over here and hide these things real quick. So I'm going to save it as a set, and we'll just NOS 3. We're going to save it as a set. and then remove all right now, right? So in between this area right here, and we're gonna zoom out just a little bit. We could say that this is about, dude. Let's do it like this. We could say in between this area right here, this is a balanced market where we were just going sideways, right? So we got this little pop up, and then we stayed right here. We put in a little bottom, but we stayed within this little channel this morning for about an hour or so, right? So hour and a half, right? And then we needed a catalyst, or we needed something to happen, or a buyer to step in and say that this should be the ticker is price too low, and it needs to be pressed and priced more aggressively here. It's the value of it is a lot higher, and so the price needs to go ahead and move up, and we get this break to the move up. So, and the market does this over and over, and any type of instrument that you look at, right? So there's going to be, you're in a balanced market, and then you go to the upside and into unbalanced, or even to the downside in unbalanced. You could do even Bitcoin, I think right now is like that right now. So that's what the TTM is measuring, periods of being in a balanced market, and then it's trying to tell you to catch whenever the ticker goes into a price discovery and breaks out to the upside. And so that's when it triggers a fire as being out of squeeze or what have you, right? So if we come back over here to our sets, okay, so here's our set, right? So the way that this works on the TTM, and I'll go over the Bollinger Bands a little bit here, actually the underline a little bit more. So the Bollinger Bands are just based off of a moving average, so a simple moving average. And so usually it's 20. So it's measuring 20 units back. So if you're on a 5 minute, it's measuring 25 minute candles back. If you're on a daily chart, it's measuring 20 days back, etc., etc., etc. Now, me personally, here in the room, I believe that's a little bit too lax, a little bit too laggy, so I changed mine to 18. And then what it does is it takes that average and it puts standard deviations to the upside and downside. So the upside is standard deviation times 2. To the downside is standard deviation divided by 2. And then you get these two lines, right? Now, the white lines, which are the counter channels, right? So the white lines, which are the, actually, I may have this backwards. Let me just double check. Yep, the white lines are the counter channels. So they are the same thing. They're based off of a simple moving average. Usually by default, it's 20. You could also go ahead and change it to 18 to make it a little bit less laggy. And the deviations for it to actually show the lines that are on here are based off of ATR. So you have ATR stands for average true range, and what that means is for a period of time what the top to the bottom of the price movement actually is. So if you're measuring 18 candles, 20 candles, you're measuring that far back and what the high and the low is, and then at the high you're getting these this print up here, and then the low of the actual the low of the candle, right? So does it make sense? Everyone with me still? I'm feeling like Lycee is set up for a breakout. Oh, cool, dude. Is that, put the actual ticker, so the actual ticker symbol, and we'll look at it here once we're done with this, okay? And so the way that the TTM works here, and this is why we have it down here in the bottom, is that whenever the Bollinger Bands are within the counter channels, then it's going to fire these red dots right here. So this is, now if you go and you read anything else, TTM squeeze through John Carter, this is when you're supposed to not do anything. So whenever there's red. Now I like to buy when everyone else is not buying, though, whenever the market is at support or in a balanced market, because that's when you get the best price, right? So if I was to go and buy right here when it starts showing squeeze to the upside, I'm already up in this area 161 when I could have been getting it down here at 160 and making an extra $1, right? So according to my rules here, you buy whenever there's at least three dots of this TTM showing red. Okay, so these are your indicator dots that you're red, that it's red. Now, the histogram here, the bars that you have to the upside and downside here, that's measuring the volatility to the upside and downside, and basically kind of a little bit showing you direction, but it's just measuring volatility. It's not fully telling you direction. So with that being said here, the way that this is going to work is that whenever these go cyan, this light blue, that's your extension here to the upside. And then if you're just trading, right? If you're just trading with TTM, you're supposed to take profit whenever these go dark blue. So, and then if you're short, you could also go ahead and do puts or short whenever it's red, and then you get out whenever it turns yellow, etc., etc., right? So with that being said, that's the way that the TTM, and you can see where the Bollinger Bands are right here, and they're within the counter channels, within the white little channels here, and it's showing that these are all that we're in a balanced market. There's a lack of volatility in the market right now, right? And then whenever we get that break to the upside, we get a really nice move. Now the thing about this is that this type of and a lot of traders trade like this. If you guys know who Qual Maggie is, go look him up on Twitter. He actually trades the same style, but he doesn't. I don't know if he uses TTM or not. Qual Maggie does it. There's a few other breakout traders that do the same thing, and I didn't realize that that's. I don't like being labeled as a breakout trader, but this is what it is. So, and the thing about this is that this is a little bit of a low win rate, high return type setup. So you guys got to make sure that you know that it's that your win rate may only be like 50% or so, right? But whenever you get a winner, it's going to erase all those losers that you get, because the percentage move that you get on these types of things are going to be like maybe 10, 20 R, right? So like in this instance, you got 1.55% all as far as the full ticker, and then $2.48 altogether as the and the actual move, right? So if you're actually trading options in this and you got the whole $2.48 on the move, it's probably more like probably 100% on if you got one out the money or what have you. All right, if you guys want more to know more about like the actual option thing, we'll talk more about options and picking strike prices maybe on Thursday. Okay. So with that being said, that's the power of the way that this works, is whenever you get a really nice base, right? A really nice consolidated or balanced market, and you get the breakout, the bigger the base, the bigger the expansion. That is the way that you that is a really nice move that you're going to go ahead and get. And so there's been a bunch of these like LMT a while back. So right here, this was a really nice swing that we took here in our chat, and this is based off of when this was actually our catalyst that gave us here to break to the upside, was actually the war in the Ukraine. So we had this big balanced market right here, where this is just going sideways, right? And then we got that that TTM right here. Here's our dots 1, 2, 3, 4 on the bigger time frame, on the 4-hour time frame, and then you get this huge nice move here to the upside here. So if I come and do it like this, so this dollar amount move that we get is from right here, and I traded it up to I thought I got to 600, but it was just this first peak right here. So that is the total amount is about 19% or $72, right? So you hit a move like that and you're able to hold on for a little bit, or you just roll over your contracts. It's life-changing money. Life-changing money if you're able to get a setup like this and then get the breakout here to the upside whenever you get something like this. There's also ones that I've traded like Etsy. This one's going to be a little bit harder for me to find, I believe, because it was so far back. Yeah, right here. So I'm not going to go through and look for all the stuff, but you could see right here that this was This was a little channel right here on this Etsy, right? And then we got this nice break for here from the 175, we'll say, up to 300. So really, really nice at those. Never knew, never knew what all those colorful lines meant. Yeah, they actually mean something, bro. They actually mean something. It's not just a circus going on over here with a bunch of nice colors and stuff, but that is exactly it. So, all right. Now with that, a little bit here, I'm gonna go ahead and let you guys see a little bit. So we also coded the candles on in our room to also give an additional set of triggers here as well. So if you come over, let's do this one. So our that's not. See the SPY. So that, yeah, so the SPY right here, so the same thing, right? So we had this consolidated market going sideways, and then once we got this, these purple candles right here, here's your TTM showing 1, 2, 3, 4, and then here we go to the upside, and the purple candles right here are extra confirmation. They have MFI also coded into them, and so if you're taking a trade off the purple candles here up to the 412, and we know 412 is resistance according to open interest today, that is a really nice trade for $4 on the spot. So really, really nice as well whenever you have that. All right, now like I was talking about here, so this just measures volatility here in the TTM. It does not show direction, and it's sometimes pretty hard because in the morning this morning we saw this type of price action where this pushed up, it came back down, it pushed up right here into the resistance, and then we thought it was going to break to the downside, right? And it did. It gave a nice little spike down here, but there was some bids sitting there, and it pushed back up. So, and you can see right here on the TTM, it's already showing that it's trying to move to the downside. But the TTM is not a really good indicator as to showing us which way that we're going to fire off an expansion, right? So the way that we talk about this in our room is that a consolidated or balanced market is compression, and you got to think of it as like whenever you're pushing something together, right? So you're pushing the price action into a very, very small place. What happens when you push a spring together? It wants to pop out and expand, right? You get a big explosion, and it just wants to move very, very quickly. And that's what happens. You got to look for that volume confirmation whenever you get your breakout here to make sure that it's not a false breakout. Make sure that you get your volume confirmation for it to keep on moving. All right. So with that being said, the way that we do this is these are the MACD 2 lines, right? So I don't take the full MACD. If you come over here and you use Thinkorswim, you could come and type in MACD. And these are your convergence divergence lines, and they're just based off of moving averages, right? And I leave it at what do you call it, default settings, and you press apply, right? So now, oops, I did this wrong. Sorry, one second. I'm over here saying don't use the whole thing, and I put the whole thing. So this one right here that says MACD 2 lines, don't do what I just did and put the whole MACD in there with the histogram, okay? So you do that, and then you could actually move it up so that both of the indicators are in the same same spot, all right? And you press apply, and your MACD is going to overlay your TTM. So these are just your divergence convergence lines that are based on EMAs over the TTM, okay? So this is going to tell you direction that you should get your expansion and move to the direction that you want it to go, right? So for instance, we're going to go ahead and zoom out. We'll come a little bit further in, and then we're using this example right here of this area right here and the fire to the upside. So here is all of our consolidation, all of our compression right here shown on the TTM red dots, and then whenever your fast MA crosses over your slow MA here, with it being in squeeze, that is your indication here as well to go ahead and get in the trade, because now you have a little bit further confirmation on which way it's going to go. So and that you could see that it's in compression all this time right here, right? But the fast line is underneath the slow line here, so it's not the correct time. Once it crosses over to the top side here, once the fast line crosses the slow one, and you have your TTM firing red right here, that is a good indication for you to be able to take that trade. And then you're risking to the bottom of the actual, you're risking to the bottom of the formation of the consolidation that you have there. So you have to put your stop loss where your thesis is invalidated, right? And so if you're taking a trade like this, your thesis is that the market is in a balanced or consolidated compression state. It should not break this channel to the downside, right? Because their TTM is show, or excuse me, our MACD is showing to the upside. So we're going to put our stop loss right below the structure. On this one, we did get this little spike down. Up to you if you want to put your stop all the way down here or just under the structure around this 156, I would say, 160. And then if you're taking the trade right here on the cross, right here, it's going to be about 160.37, and then you get the nice move up here to 162.37. So about $2 on Apple is a pretty nice move. So, and there's times like let's actually look at Tesla. Tesla was actually pretty nice today, right? Here we go. So here's a little bit of an example. It didn't fire too much, but here's our period of consolidation, right? And then we did get the break here to the upside, and then even this, if you're counting it, so our crosses right here, our red dots. So our entry is going to be about right here, 914 to 922, $6-7 is still not bad on Tesla. So that's something you could look at there. And then I don't know of any other ones today. Here we go. Here's a good one here on Nvidia. So here's your period of consolidation right here and compression. Your risk is going to be down here in this area, and then your in is going to be about right here, 183 about 50, and this went all the way up to 189. Cool. Cool. What do you guys think about that? I don't know if you guys have played around with TTM and know how it works and kind of like what it does and the underlines of it and origins and everything. What did you guys think about that? Is there any questions about that or anything? So this is one of our setups that we play in, play kind of day in and day out of in our chat room here in the Discord. So, and everyone in the room just kind of calls out, like if they're, if they're trading something, they'll say, and they see something setting up, they'll say like, so and so ticker is in compression, and so then we already know to go and pull up what we're looking for in this. And so like we could say like on this right here, it didn't quite trigger right here on Revlon. It did right here though. So yeah, so here's your TTM right here off of this action right here, right? And then you get this break here at 972 to 1060. So a dollar or 10% on a small cap, dude, come on. Looks great. How far out are my option dates? Whenever I'm playing like this, I'm playing the next day expiration, dude. So if I'm playing like the SPY or like SPX, it's gonna be probably same day expiration, like 0 DTE. And if I'm playing anything like Tesla, Apple, stuff like that, it's gonna be the end of the week. Now I do have rules whenever, like if I'm in a trade or just volatility is not very high that day, that part is discretionary. That I would take the next week's expiration if there's not a whole lot of volatility that day, so then the theta does not set in and kind of screw me on that. Appreciate all the likes, guys. If you guys do get value out of this, please leave me some likes here. But that is our little system here according to TTM. So yeah, the dark blue and light blue. So we kind of went over that here, just really quite high level. But basically, this means that you're still in a volatile state that is moving. The volatility is expanding. Whenever it gets to the blue area, that means the volatility is contracting, and that trend may be coming to a close. So now keep in mind, you could, so this is a 1 minute, right? So we could also come and say like we do a 5 minute. Now, this only shows in one now, and it's a whole lot more slower, and it did show, and then you're able to stay in a little bit longer, but it's gonna lag on you. You're gonna miss some exits if you do it like that. So this is volatility is expanding, volatility is contracting, volatility is expanding downwards and contracting here back to the mean. So you want to think of these dots right here as the mean. Cool, cool. So buddy over here wants to know about Lycy, L-I-C-Y. I'm going to go ahead and take off the Bollinger Bands and everything. I'm done with those. It's a pretty decent setup, dude. Over 750 if it could get over 750, dude. This is a pretty nice bottoming right here, man. This is see, this is exactly what we're talking about as far as like the TTM. So this is actually a really good, teachable kind of moment here. So you have this area that it's consolidating in. It's made a really nice base, right? And this works best, right, on tickers that whenever you get something that's very beat down, so something that's very, very beat down, and then it has a very, like if you're playing small caps, that's something that has like a very high short float. This is how you get the best squeezes by finding things like this. And so you're buying here towards the bottom, and then everyone else is going to be alerted, and when everyone's chasing up here towards, $8.30, $9 or what have you. But if you're scanning and you're looking for the TTM right here, and here's your cross to the upside, right? And it tried to cross back down right here, but it didn't necessarily do it. So you're still good. It just needs to get over 750 and this $8. And then there's also where I don't have it set up, but I do have a scanner where on the Thinkorswim you could put in the TTM in here. So you could put in TTM squeeze, and then yeah, you could change. So you could. I'm not going to do it right now, but it'll actually show. You could have the dots show on your watch list, and you could have the histogram show on your watch list. So then you don't even have to have the ticker up. For you guys that don't have 4 or 5 monitors, you could just have your watch list up right here, and then you know if a ticker is going to squeeze or not. And then what you could do is in the scan area, you could have it scan your watch list, and whenever something is MACD to the upside and TTM, it'll send you a little alert here in Thinkorswim. So then it'll also send you like a text if you wanted to do that too. Best time to use, yeah, the best time. So I like it in the volatile states. So whenever you get like, dude, there was a ticker the other day that it may have just been the SPY. Yeah, it was the SPY the other day whenever it made that really nice move. No, that's not it. Yes, right here. So right here, I took the short trade right here, and I actually just posted a video of this on YouTube. So I made 18K on this trade from this 402 down here to this level, and but the thing is that I could see that this base was forming right here, and I could see that the TTM was coming in. So I know on the 3-minute it doesn't show it, but here on the 5-minute it didn't show it, but the 3-minute it does. So here's your purple candles here as extra confirmation. Here's your TTM firing these red dots. Your cross to the upside. So your entry would have been somewhere right here. So about 408. And this thing went to 413 that day. And then you also get a second chance right here to add or. So if you sold up here towards the PDC, the prior day close price, and then this contraction that came in right here, here's your second chance, your cross, you could add or second chance to be able to get in for the next move, the next leg, I should say. So the best way that this works to answer your question is at the open is whenever you get a dip like this into a point of support, right? So you get a dip like this into a point of support, and then it holds, and it those buyers, this isn't, oh yeah, this isn't it, what the hell? over here. So when you get a dip here at the open, you get a little push up dip, and then the shorts think that they have this, they have this kind of trend by the balls here, right? That we're going to continue just selling for the rest of the day, but these buyers step in and start bidding up and accumulating right here, and then push this price really, really aggressively to the upside. So, actually that move is actually right here. So 395 up to 406. So $10 on the SPY, $9 on the SPY. It's nothing to, kind of whiff at. So, but that's the best way that this works. A little bit of a pop at the open, down to support. You notice that it's doing this, right? And then you're able to go ahead and get in for the swing. Now, the other way is that you get a little dip, or a little, like instead of this little pop, you get a little dip at the open. It pushes up, and then you get like a flag from it, like demand exhaustion, and then the continuation to the upside. Tesla actually did that the other day. So the example would be Tesla right here. So here is exactly what I'm talking about, and this is like what I look for exactly. So a little dip right at the open, pushed up, volume exhaustion, right? There's not enough demand to continue with this type of trend straight upwards, so we have to reaccumulate. And then here's your TTM right here, showing that that period of consolidation and sideways. Purple candle, here's your cross. So your entry right here from 862, and then we got up to 891. So it's about 30 bucks on that trade. So those are the best ways. Like if you guys want to screenshot and go back and look at those days, and then those are the best ways that you're gonna you want to use the TTM, like as far as context, right? So timing, I believe timing when you're trading is everything, right? So you could take a really nice trade, but if you're early, or it's just there's no catalyst, there was no volume in it, it's not going to move its best, right? So if you're able to catch it with the right context, like this Tesla or like this SPY on the right, then that's going to help you a lot better. Yeah, so exactly. So the purple right here and the MACD right here. So this would be your entry right here, about 862. And then I have these EMAs here as trend, and the EMAs never came back down, dude. So even if you were to hold the next day, what happened? You closed at highs, right? So I think we talked about this a little bit at the room, that there was no reason to sell, even on the SPY that day. There was no reason to sell, right? You closed at highs. If you got in at 862, the probability of you gapping down and being below 862 the next day is very, very low. So we closed at highs. You could go ahead and hold at least a little bit overnight, right? And if you take some on the first candle, you're over 900 now, and you got in at 860. So yeah, being early. So I think that's what's cool, dude, is that, I'm a little vulgar, guys, is that I think as option traders, you get to kind of walk around and let your levels hang a little bit and let them, kind of clank, is because not only are we trying to bet on direction, right? So, but we also, so we don't have to just be right on direction and movement. We also have to be right on timing as far as options. And that should definitely pump you up as an options trader, that you're adding that extra element of time to your trading. And 90% of people can even trade without that element of being right within a certain amount of time. And we're adding that portion into it too. That's something to be proud of, dude. If you're an options trader, that's something to kind of beat your chest about. All right. If you guys have other tickers or stuff that you're looking at for like tomorrow, I'm happy to go over it. We talked a little bit about HKD. I think we kind of beat that like a dead horse. I'm still looking at Revlon. It's not under the 850. It actually closed right at 850. So under $8, this is our neckline here that we would turn bearish if we break this $8. So we'll take a look at it tomorrow. AMTD, I know that you get small cap guys are you guys are looking at this a lot more. Same thing, kind of consolidated off the run from after hours and pre-market kind of today. So anything under like 725 or so. Just reviewing what you guys have said here. It seems like the market is slow this time of year. Do I concur? So I don't know if you're still here, Sparky, but yes. So August is historically pretty slow, dude. So in the summer is pretty slow. As a matter of fact, the action that we've been having on small caps and big caps is definitely um, out of character, and it's really nice, dude. We've had a really nice, summer months as of the last couple years. So I remember before, dude, when during summer trading, the market would open, you'd hear the little bell ring, and you'd be like, "Did the market open? Nothing's happening." But now there's a lot more players, there's a lot more retail traders and stuff, and there's a lot more movement. So it's definitely a blessing. It usually does go ahead and pick up around after Labor Day. So when all the kids go back to school and all that stuff. Yeah, after Labor Day, definitely increases. So, yes, sir. So, and then getting into like the winter months, we usually get some pretty nice big moves going into the end of the year, and then February is usually my biggest month. February. Cool. Any other tickers or questions? You could also ask me questions like of things that you're struggling with in your trading, the psychology stuff, or uh, anything options related now too. If you need help with option stuff, we'll go over option chain and strike price and stuff like that on Thursday. That'll be our topic. So come back on Thursday if you're not too into the um, options world as of yet, and we'll dig a little bit deeper, and then I'll put a lesson plan together about delta hedging and open interest and all that stuff. I actually had a meeting today with a pretty cool service called Rocket Scooter, and they're pretty dope. So I the guy that owns it seems pretty cool, and all their trading is based off of options strategies, and I agree 100% with the way that they have them. And it's funny because like I have these ideas as I'm trading, and I know that they're there, right? And why I do it based off of the open interest, having a positive or negative delta, and I just don't know how to code, and I'm not smart enough to actually put it to something to use. I just know that I'm just really good at recognizing patterns and like things happening, and this guy is smart enough where they actually made what I was thinking of, and it works. So pretty cool. I'm excited to see if we could work with them a little bit more closely. Um, Anything else, guys? Also, just some housekeeping stuff here while you guys think of any type of questions. Um, I am trading live tomorrow morning on YouTube, so we will trade live tomorrow at 7:30 my time, 8:30 Eastern. We'll start making our pre-market watch list and game plan at that time, an hour before the open. Come hang out, come trade with us. You trade live with us. Ask more questions. I'll point out compression and TTM squeezes here for you. And then Thursday we will have after evening class just like we had here. Sunday we have Sunday stock study, and that is our tentative schedule going forward indefinitely as of right now. Uh, Also, I am doing away with the lifetime membership. If you want to become a member and come trade with us, learn how to take these types of trades. Um, the lifetime membership right now, I believe I have it for 347 for like if you pay me once, 199 for two payments if you want to cut it down a little bit, and it just doesn't make sense from a business standpoint where it just doesn't make sense, dude. So it's it was it was meant to get members in the room. We have a really nice core group of guys now in the room. We don't necessarily need people in there, so we want people that want to be with us. So if you want to take advantage, be a lifetime member. It's an awesome value. I think no one else offers that type of value to learn how to trade equities and options and these strategies that we're giving. Someone actually told me the other day when I was streaming on the Tradecaster, they were like, holy hell, this other guy charges 350 bucks. He only charged $84 a month. Yeah, dude. I just want to be able to pay the bills for the chat room. So cool. So if you want to sign up for the lifetime, it'll be gone by Friday. Let me know. Send me a DM on Twitter. Cool, guys. Do you guys enjoy? So please give me a little bit. I work off of feedback, guys. If you enjoyed this, let me know. If there's stuff I could improve on, always send me a message. I don't take it to heart. You can tell me you're a fucking idiot. I have people tell me all the time, you're just a fat fuck. You don't know how to trade. Bro, YouTube is rough, bro. During the whole AMC thing, I was paper-handed doo-doo, man. Bro, I've heard it all. So, constructive feedback is always accepted, all right? I'm here to work with you guys and educate you guys, and if there's something I could do to improve, I will do it. So I trade SPY more than other tickers. So here is a big complaint, and so off of feedback, right? So working off of feedback again, is that pre-split Tesla, when Tesla was 1,000, 2,000, whatever dollars, right? The contracts for Tesla were $2,000 to $3,000 each, right? So if you're a brand new trader and you're, excited, you just got your stimulus check or you just got your taxes back and you're able to fund an account, or you saved a bunch of money to be able to open an account, $1,000 or something, you can't afford to play Tesla, right? So you can't ever, uh, there's no way that you could relate to me and what I'm saying in trading Tesla, right? And then there's a bit of resentment that is built whenever I'm showing P&Ls of over 5 figures, and you're like, dude, I made $50. That's not good. You know what I mean? It's bullshit, dude. $50, you should be looking at it as a percentage rate. If you took a trade on a $500 account, you made $50. That's what, 10%, right? That's the way you should be looking at it, dude. Not as from a monetary state. And a lot of the traders that would come in, they would do that, right? And like I said, it built resentment against me that they couldn't relate to me because I'm just showing all this money and I'm trading this. Now, the thing is that the setups that we trade are meant for nailing kind of tops and bottoms, right? As close as you can, anyways. And we make money off of the volatility, not necessarily from sizing. So you see a lot of other people that have chat rooms and stuff, and they'll throw 20,000 shares at a ticker for maybe like 10 cents or whatever, and it's like, cool, you made 2 grand, dude. Congrats, you made 10 cents. No, dude, we play for dollars in my room. We don't play for any of that penny crap. I played Revlon today. I played Revlon today on this dip rip, and I made $1.50 or something like that. So on this dip here to the PDC, and I took a little bit of profit up here towards this line, and then the rest up here. So $2 on a $10 stock. That's how we like to do in my room. So getting back to the question, the reason why I trade SPY and SPXs a lot is because my members could actually afford it. So then we're trading the same thing along, and it feels there's a certain type of just nice feeling that someone else took the same exact trade that you did. It's someone that you respect as well, right? So if I'm going to call something out, it would behoove me to take that trade if I'm going to call it out and ask, not necessarily ask you to risk your money, but you're putting your money at risk, right? So I'm going to take the same trades that I'm calling out and that you're able to take a trade here, and we're going to celebrate together. We're all going to win together. So that's it, dude. Someone told me that on another streaming service that the guy just plays Tesla all day long. Still to this day, like right now, this is a current thing. And again, that person that told me that resents him because he can't relate to him and he can't trade like him off of that. So as to where an AMD, an Apple, or a SPY contract is $1, right? Oh shit, look, they found me. The best adult dating site. I gotta go, guys. I gotta cut this thing short. Oh my gosh. Oh, they are spamming the hell out of us. Oh my god. That's funny. Bullish on XYZ? What's XYZ? I swear, you click on one Riley Reid video, bro, and they follow you everywhere. Oh, yeah, I'm bullish. Dude, I'm about to give them an analyst upgrade, bro. All right, guys. Any last minute questions? I'm gonna go ahead and I've been working actually all day. I took an hour and a half to go to the gym, and I did legs, and all the leg days equipment's outside. So I was sweating. It didn't even seem like a break. I was sweating my ass off doing legs outside. So, but I've been here at the desk since like 6 o'clock this morning. Cool. I'm gonna take off, guys. Thank you for coming and supporting. I was a little bit worried about doing something a little bit out of my regular schedule. I didn't know if anyone was gonna come and hang out, so I appreciate it from the bottom of my heart. We'll do it again on Thursday. You guys take it easy, and we'll see you tomorrow in the morning for live trading. Okay? See you guys.
Go home.